Radhesham Mundra, President of Bagalkot District Chartered Accountants Association and your MOC Property. I, on behalf of KSCA and BDCA, welcome you all for today's webinar on key aspects of RERA. Before we begin, let me brief you all about KSCA. KSCA, formed in the year 1957, regularly conducts seminars, conferences, workshops, study circle meetings of a professional interest for members. It represents concerns, issues, and suggestions of the CA fraternity and business to various governmental regulatories. Any association derives its value and power from the members associated with it. KSCA welcome you to be a part of 3000 plus strong tribe. Online registration link for lifetime membership can be found on www.ksca.com. To speak on today's, we have an eminent speaker who is quite popular in RERA Act, CA Vinay Thyagaraj from Bangalore. Welcome you, sir. I also welcome CA Gaurish Bhargav, Chairman Accounting, Auditing, Corporate and Allied Laws Committee, KSCA. Today's webinar will be moderated by CA Pankaj Kasat, Chairman, Official Members Empowerment Committee, KSCA. Let me just brief today's attendee about the technical aspects of this webinar. There is a Q&A option on your screen where you can write your questions related to today's webinar, and our moderator will take your questions at the end of the session. It is indeed my pleasure to introduce speaker for today's webinar, CA Vinay Thyagaraj. Vinay Thyagaraj is a chartered accountant and a law graduate, founder partner at Messrs. Venu and Vinay Chartered Accountants, has over 20 years of experience in business consulting, structuring, and taxation. Presented business taxation technical papers and participated at various conferences, forums, regular speaker at various regional TV channels on financial matters, budget, etc. Has been working on the Real Estate Regulation and Development Act 2016 since the inception of the Act. Presented more than 150 technical sessions on RERA to industry associations, professionals, home buyers association, law universities, and for public at large. Has served as technical committee of SIRC of ICI, presently part of a governing council of National Real Estate Development Council for Karnataka chapter. On behalf of BDCA, I thank CA Kumar Jigjini and team KSCA for giving the opportunity for conducting the joint webinar with our district association. Over to you, speaker, sir.
Thank you, Radhesham. Thanks for KSCAA and also Bagalkot District Bagalkot District Chartered Accountant Association for inviting me to talk on a subject on RERA. Before I start the session, I just wanted to place it on record my sincere thanks for both the organization for inviting. Second is, there may be a technical glitch in between when I present it, and you have to apologize for that, for the power fluctuation or the disconnection of the internet facility. However, I will reconnect within no time. These are the two things which I would like to place it on record before I start the session. Okay, so anything else before I start the session?
Nothing, sir.
Okay, thank you. I'll start sharing the screen.
Yes.
Thank you. So, Bagalkot is a district which having good places to visit. And on the one hand, we have an opportunity to hear from wherever we are and listen to the various webinar. On the other hand, maybe speakers like me who fond of looking at the various places are missing these places in Bagalkot and other places. Maybe when I visit the next session, I will love to see all these places. So let me take you through the various key aspects of RERA, and this presentation goes about 2 hours, and In the presentation, I'll touch upon the background, the objectives, enactment of the Act and the rules, and also jurisdiction of RERA and who is having authority under RERA, applicability of the Act, important definitions. As a chartered accountant, as a professional, it's very important for us to know the basic definitions of the Act or the rules. And next is important aspect. RERA is about the registration. Of course, I'll just touch upon. I may not get into deep into the registration aspects. And next is about the CA role and also the professional opportunities. Of course, we are all professionals and we are all attending this session with an intent to have some opportunity in the RERA. So I'll touch upon what is the profession, what is our role, and also the professional opportunity which we have in this. So why do you look at why do we need a RERA? What was the wrong in earlier legislation or the existing law? If you see that RERA being the real estate being the second largest contributor to the GDP, it's a second largest contributor to the taxation, second largest employment in next to the agriculture. Unfortunate is we didn't have a regulator to regulate this industry. Unlike a SEBI for investment, banking for RBI, IRDA for insurance, we didn't have any regulators for this industry for about 70 years. Second is there is no specific qualification or a capacity for somebody to do this business or to venture into this business. It doesn't differentiate the big, small, qualified, unqualified, capable, incapable, trustworthy, untrustworthy. And there was no way that for a home buyer to measure and look at his background except to see his earlier project. Third biggest challenge what we had was a time. So if you think any real estate project, whether it's a small, medium, big, large, the time taken to complete from the inception used to be at least about 2 years, which goes up to 10 years. During the period of these 2 to 10 years, it was very difficult for any home buyer or for that matter, any stakeholders, whether it's a lender, whether it's a vendor, whether it's a banker or the landowner or the developer himself, really didn't had a opportunity to put everything on a single plotter and look at what's happening over the period of inception till the end, what I had promised and what is that I'm delivering now, and what was the time which I have given to myself and to all the stakeholders, and by what time I'm delivering this, what are the approval NOCs which are compulsorily to be obtained from time to time, by end of it what all I have obtained it, whether I obtained or not. So these are all the various challenges was present in the existing practice. Next is easy to litigate. It's very important to know pay 250 rupees as a court fee stamp and bring the project to a halt. So it was very easy to litigate. Next is transparency was missing to certain extent. Accountability and both the realtors or the builders was missing, and also a standardization. What do you mean by standardization? I have some practice now on selling on the super built up area. Somebody sells on the built up area. Somebody says something. So as a home buyers is always under the dark. What was I am buying? Is it at the standard industry standard? And also a disputes, like it's very easy to create a dispute, it's always difficult to come out from that, it's more burden on the judiciary also. Important aspect, this is an industry which deals with lot of money is a money. Okay, I'm not telling about the physical money, otherwise also there was a lack in financial discipline, collect the money from the customer on the launching time, and by the time of completion there was money was completely exhausted, money was used for other projects or diverted into other business, which has an impact on the present project. Clarity and standardization of agreement and transaction. It's very difficult for somebody to see that somebody has written 3 pages agreement, somebody write 300 pages agreement. Always it was a difficult for somebody to understand also which one is holds good if it goes on a dispute. Next is huge investment. As I mentioned in above points, point number 1 to 8, the various stakeholders are all part of this business. or a promoter or the financiers, government, buyers, suppliers, landowners, or various agencies which are all involved. And most of all these agencies were of a different pace or different information for them to get that. So these are all the little background about why the RERA and what was the intent of RERA. Having said, like, so is that something which is of a new, like, was that has come all of a sudden overnight? The answer is no. In 2009, the central government, part of central government, like Ministry of Housing and Urban Development is the in charge for it. They started looking at, can we have a law, can we have a statute which regulate the real estate sector. That's how it started in 2009, and by the time which was notified, it's 2016, almost about 8 years or 9 years, where there is a 2 or 3 government, yeah, like central government has changed, and that has become reality in 2016. So that's a journey of RERA. It is not, which has not come overnight. Maybe I can say that the deliberation which went into this act, this statute, is larger than the GST itself. So that is a background about journey of RERA. As we say, as a professionals, always from the student days, we look at what is the preamble or the objective of the act. So the same thing here, this act is notified in the year 2016, and the 16 is the act 16 of 2016. This is an act to establish the real estate regulatory authority for regulation. One is, let's look into the act itself, is called Real Estate Regulation and Development Act. It is not only the regulation, and also there is an obligation on the government and obligation on the statute to develop this industry also. In the it is not only the regulation. So hence it is called Real Estate Regulation and Development Act. So the objective and preamble is regulation and promotion of the real estate sector, number one. And in what? In case of efficient and transparent, which we all know that there was a limitation and there was a lacuna on both efficiency as well as the transparent. And also the one of the main focus was the interest of the consumers, and also to fix to establish adjudication mechanism, including the appellate tribunal. Earlier, the case was consumers or the home buyers had an opportunity, had the option of filing before the civil court, like civil court, or and before the Consumer Protection Act. So this act made it as part of the act. It is now there is an adjudication mechanism and also appellate tribunal. So home buyers are all now have a fair chance, fair opportunity to come out with their cases or dispute in a speedy way. These are all the broader category, as I mentioned already. Like, one is the accountability, bring the transparency, have the professionalism, establish a symmetry of information between the promoter and allottee. This was always a challenge. Like, whatever required only used to be given by the promoter. Now, by implementation or by effect of RERA, there would be only a one information. Whatever promoter is having, the allottee is also having the same information. And in case of non-compliance, there are certain responsibilities. In case of responsibilities are not done properly, there are penalties for that. And also establish a regulatory mechanism to look at overall industry development. Of course, there is a fast track dispute resolution. As I mentioned in the earlier slide, there is adjudicating mechanism as well as a tribunal, appellate tribunal. So maximum number of days which is allowed under RERA, if you file a complaint, you will get an order by 60 days. Fairly 60 days, because initial days it used to go about 80 days, 120 days, because of quite number of complaints which were belonging to the long time were heard by the respective adjudicating officer, which used to take a time. Otherwise, fairly 60 days is the time which get resolved it. And finally, to promote a good governance in the sector and to bring investor confidence. If you see, this industry is in a negative list either by a lender or by an investor. So somebody says that, I'm sure that you all experience, the moment you say real estate, you are into the real estate, people look at in a different way. People say that you have a large money. Second, you are a crook. So both are, like, may not be correct all the time, but this industry is marked in that way. So looking those things as an aspect and looking that as a background, the RERA has come into picture. So the outcome of this is would be the outcome of this is there is a regulator which is called Real Estate Regulatory Authority. The act is called Real Estate Regulation and Development Act 2016. Accordingly, there is a rules. Every state has rules and also regulations itself, and this is under Ministry of Housing and Urban Poverty Alleviation. So this is the background about it, and uh, let me move forward in terms of the enactment of the act. This act is, as I mentioned, 16 of 2016, which is effective from 1/5/2016 itself, not 2017. So the act has come into force from 1/5/2016, of its 69 sections. Most of the 69 sections is applicable to the state government, wherein state government having a mandate and also a obligation responsibility to implement the act in its true essence. So for the state government, it is 1/5/2016, and for the projects and the promoters, it is 1/5/2017. So what happened between 16 to 17 is the state has formed and finalized and implemented the rules, number one, and identify the authority and have appointed the authority, number two. Number three, brought some awareness about the RERA. This is the period in which the enactment between 1/5/2016 to implementation of 2017 has happened. So which I have clearly told you already in terms of the preamble on the left side. On the right side, if you see, is the structure of the act. Section, the entire act has 92 sections, which is spread across 10 chapters, chapter 1 to chapter 10, of which chapter 1 to chapter 3 and 4 is very important. Chapter 1, 2, 3, 4, as we know that one is applicability, extent of application, and number 2 is a definition. Chapter 2, chapter 3, chapter 4 is important in terms of the projects and also the agents and the promoters and the allottees. Remaining chapter 5 to chapter 10 is more related to the authority in terms of how they perform their activity and their functionality aspect in the RERA offices. This is a broader picture of it, and section 1, as I said, it is applicability and its effect and also applicability. Earlier we used to read any act. This act is applicable to the entire India, whole of India except Jammu and Kashmir. Of course, this act was also like that when 2016 has come, but now there is no more non-applicability to Jammu and Kashmir. Of course, recent union territory or a state which has been notified the rules is Jammu and Kashmir in the month of August. Now this act is also existing and equally applicable to the Jammu and Kashmir also. So this is the structure of the act, and I don't know how many members have read this act. This act is a very small act, and section 1 to 19 is very important for us to read this act. And this act is like section 1 to 19, as I told. Section 1 to 19 having about maybe about 30-40 pages, not more than that. So easy for all of us to read this act in entirety. Doesn't take much time for us to understand also. So my recommendation for the for all the members here is go through the act. It's a very interesting act, and yeah, if at all if you are practicing in this act, or if at all if you are issuing any certificate under RERA, everybody to read the act before they issue the certificate. It's a very small act, not a larger act, but the implication is very large. So at least section 1 to 9 is very important for us to read. The framework and the structure of RERA, as I told you, this is a central act. Okay, it's a central act. Real Estate Regulation and Development Act is a central act, which is notified by central and passed in Rajya Sabha and Lok Sabha both. And section 20 of the act gives a power to the rules, a power to the state government to frame a rules, notify a rules, and also intern the regulation. So accordingly, Karnataka Real Estate Regulation rules 2017 is notified by the state of Karnataka. Karnataka state has notified the RERA rule 2017. So with that, we have a central act and we have a state rules. Accordingly, the powers are given under the act, the powers are given to the state government only. So there is no power which is with the central government in terms of the supervision or the monitoring of this implementation. So entire act, the act, central act has given a power to the state government. First is to frame the rules, second implement it, third is monitor it and supervise it, and only to report to the central government through the central advisory council. So there is a central advisory council. As a central advisory council, the chairman of the central advisory council is the Ministry of the Housing itself. So under that, all the state RERA authorities fall into they're part of member of central advisory council, and also some of the home buyer association and industry association like an Redco, CREDA is also part of it. So this central advisory council meets every 3 months to know what is the status of implementation and what is the best practices to be implemented. So as I mentioned, Central Act, Karnataka has Karnataka RERA rules 2017, and also appointed the authority called Real Estate Regulatory Authority. And presently the authority is in the CSI compound in the Mission Road. And if friends, if you all know that in the Unity building there is a income tax department. Presently the exemption ward is there. Next to that is the RERA office. Next to that building is the RERA office, where authority as well as the adjudication mechanism takes place there itself, and one office for the entire Karnataka. That's what is there. And also by virtue of this, the authority frame and notify the regulations. Of course, regulations are all gazetted by the state government. Apart from that, whatever the circular notification which are issued by the authority. So this is a broader framework of the act. As I mentioned this already, central government, central advisory council, state government, authority, and the tribunal. That's all is about the entire structure of the act. And of state government is the body. State government has a power to implement as well as monitor it. Only reporting to the central government about the implementation of this act. So what is there in the entire act? As I mentioned, it's a very, very small act, but has a very deep impact on the entire industry itself. Section 1 and which is, as I mentioned, applicability or the effect, preamble and the applicability of the act. The important definition section, this act, the establishment of authority takes place. Next is the registration, extension, revocation, transfer of real estate projects. Next is the agents and mandatory disclosure to the public. Public in the sense, basically the home buyers, functions and duties of the promoter. So maybe during my presentation, I will tell you to the entire act, it has a mention about promoter. Who is a promoter? We'll see the definition of a promoter, and also a allottee, and we'll see who is an allottee, and also agent. Only three people are mentioned about, only three stakeholders in this entire era. The promoter may be a builder, it may be a developer, maybe an investor, maybe a colonizer, maybe a contractor, or maybe a land owner also. So promoter has a very large definition, so which includes everybody who promote the real estate business, who promote the real estate project. So that refer to a promoter. Similarly, an allottee, there is no mention about a purchaser, no mention about a buyer. It only mentioned as an allottee. Allottee may be a primary allottee or a secondary allottee in a project. What do you mean by a secondary allottee? Means a person who have purchased the assignment from the primary allottee. Like sometimes we know that he purchased it and he don't intend to buy it, he don't intend to register it, he transfer his assignment, his transfer his apartment or a land to a third party by way of assignment. So that party is called a secondary allottee. So It includes the primary and the secondary allotee in a real estate project. What should register under the Act is project to require a registration and a agent require a registration. There is no other registrations are permitted under the Act. There is no registration of the organization. There is no registration of the entity, and it's not a registration of a promoter. It's only a registration of a project. Always a project to be registered and or a agent require a registration under the Act. XYZ company is called a promoter who is into the development of the real estate project. If they have 10 different projects, they should register 10 different registration under the Act. It is not the one promoter to be registered, it is a 10 projects to be require a registration under the Act. And also there is a functions of the promoter, as I mentioned. When the registration happens, even the pre-registration, post-registration, there are functions as well as the duties of the promoter to the government, to the allottees as a whole. One more important aspect under the Act, and also as a chartered accountant, we play a very vital and big role in terms of the financial management. 70% of funds which have come into the real estate from the allottees require a deposit into a separate bank account, which is called a designated bank account, and money has to be utilized for the specific project. We'll deal with in detail in the subsequent slide. And also agents require a registration under the Act. And also there are some rights and duties of allottees. As I mentioned initially, there are promoter, there is an agent, next is the allottees. As a promoters and agents have a functions and duties, similarly allottees also having some rights and duties to be performed under the Act. Remaining is like in terms of the powers and power of the authority, in terms of their functions, advocacy. In case of a dispute mechanism, how do we dispute between the promoter and the allottee? And we have seen that various disputes or various complaints which are all filed by the individual buyers for whatever be the reason, maybe delay in compensation, delay in delivery, or not delivered as per the promises. And also a appellate tribunal, like the first appeal is before the RERA appellate tribunal itself, and second appeal would be directly to the High Court. So there is no requirement to approach the court. Of course, there is no stop or there is no bar on approaching the other forum, but however, there is no parallel jurisdiction. It's in the choice of the complainant to either approach RERA or under any other relief under any other statute, any other consumer protection. As I mentioned, advisory council is a central government, and also finally, if it is not followed, there is a punitive provisions like a penalties for non-compliance. This is the entire gambit of the RERA, and each of these things will be developed in a fair manner in the subsequent slide. So there are few, I have taken very few important definitions, and I'll dwell with that. However, it's very important for us to go through most of all the definitions when you start practicing in RERA, because each of these aspects are very important when we practice on RERA, whether it's a small or a big definitions. It's important for us to understand and also see how this impact on this industry or the business. As I mentioned, section 2D, section 2 is the definition. 2 subsection D is a allottee definition. As I mentioned, a person who has purchased either a plot, apartment, or a building, as the case may be, and also allotted or sold, transferred by the promoter, and such may be acquired in a direct allotment or a subsequent allotment. So both are like called a allottee, and this is what is referred throughout the Act. There is no reference of the home buyer, there is no reference of the buyer, purchaser, or the customer. Apartment. So the definition of apartment, which includes everything, whether it's called as a block, chamber, unit, flat, office, showroom, shop, godown, premises, suite, tenement, unit, or any other means a separate and self-contained part of immovable property. It's very important for us to know that the apartment definition includes not only the residential, which also includes the definition of a commercial purpose also. So one more important aspect under RERA is the carpet area. And I hope you all experienced about the real estate transaction in case of a apartment or a villa project. Most of the apartments or most of the constructed buildings are measured in terms of the super built up area. What do you mean by super built up area? If you try to look at that, there is no definition for a super built up area either by an engineer or by an architect. At max, what you can find is a built up area. So what you can see on a sanction plan is also called a built up area. However, the industry has made it a practice to have a transaction with a super built up area. And super built up area means, what do you mean by super built up area? There is no definition for it. How do you arrive and how do you measure it? There is no scientific way to measure it also. But however, everybody has accepted, entire ecosystem has accepted. You start from the seller has started selling super built up area. Customer like we all home buyers started accepting super built up area. The lender has accepted super built up area. The marketing agency has accepted super built up area. Bankers, the lenders have accepted the super built up area. In turn, government has accepted super built up area. Accordingly, stamp duty is collecting on super built up area, and also property taxes are also levied on super built up area. So there is a fundamental lacuna itself. There is no definition for a super built up area anywhere. However, everybody has accepted, and we are all closing our eyes and also proceeding following the concept of super built up area and having all the financial transaction based on the super built up area, which has a multiple impact, starting from looking at the revenue to a customer or a expenses of investment of a customer and revenue to a builder, and subsequent impact on the taxation aspects by government agencies also, and subsequent on a recurring and revenue expenses like a property taxes also levied on super built up area. As a one-time mistake, one-time implementation of wrong thing has been made us to suffer throughout our lifetime to accept the super built up area. And having implemented carpet area through a RERA, carpet area definition of a carpet area under section 2K, a net usable floor area of an apartment. And we have seen what do you mean by an apartment. Apartment need not to be a residential. It includes the godown, it includes the shop, includes anything tenement. And so net usable area of an apartment excluding area covered by the external walls. That means to say, when I say that carpet area which excluding the external walls and excluding the balcony, veranda, however, which includes the internal partition walls of the apartment. That means to say carpet area is very clear. What is carpet area is like you take out everything which is not part of internal thing. Whatever you are mentioned as part of internal thing is only a carpet area. So why it is important carpet area is, as a customer, as a business, as a home buyer, I should know that how much I'm paying for myself to live. Of course, for a carpet area of 600 square feet, the super built up area is 1,000 square feet. Maybe go back and check if you have any apartment of yours or if you are living or anybody's. Even though they say 2 BHK apartment, 1,200 super built up area, and the carpet area is not more than 800 square feet. So where is this 400 square feet? This 400 square feet is called common area. What do you mean by common area? Which may be like your common walls, which may be your staircase, which may be lift, which may be a lift lobbies, and also passage, terrace, parking. So those are all called common area. So that means to say the carpet area to the super built up area to the common area, there is a range from 30 to 50%, depending on the builder, depending on the costing, depending on the lifestyle of the buyers. So now it is made under RERA. It is very clear that everybody should market their product, everybody should sell their product, everybody shall have the documents or details based on the carpet area only. That means there is a standardization in the industry itself about the practice to be followed, which gives the efficiency, which gives the transparency, which gives the which everybody follows in the same line. Otherwise, the loading factor may be ranging from 25% to 50%. The home buyers are confused why this fellow is giving lesser price, why that fellow is giving at the higher price, where there is no much difference in terms of the super built up area. The answer lies in the carpet area. The guy who is giving more, giving a more carpet area, the guy who is giving less is giving a less carpet area. That's all is the secret there. So this is very important as a professionals. All your certificates which issued either for a registration, post registration, amendment, for withdrawal of funds, whatever the certificate you end up with having is only on the carpet area, including the registration requirement under area is on carpet area. All our legal documents, which is agreement for sale, sale deed, everything shall have a reference of the carpet area. Next important aspect is the estimated cost of the real estate project. And in the subsequent slide, I'll show you what was the practice which you are following earlier and what is the practice post RERA. So the estimated cost of the real estate project is like the total cost involved in developing the real estate project, which includes the land cost, taxes, cess, development, and other charges. Why this estimated cost of real estate project is important? For the two aspects. One is for the promoter to know what is the project cost, number one. Second, for the customer to know that what is the project is developing it. He says that 2 BHK 50 lakhs and that same 2 BHK is 40 lakhs rupees. Why? The guy who is giving is a branded products, another guy is giving not a branded product. So I cannot just look at only the 2 BHK, 2 BHK can arrive at my decision on buying and also identifying the good or bad. So this estimated cost is also important for the authority to look at what is that projects are spending on that and how much they are collecting, how much they are withdrawing, how much they are spending, how much money they end up with spending in addition. And finally, it is important for them to levy a penalty based on the estimated cost. So as a finance professional, as a chartered accountant, we play a very important and critical role in terms of supporting the client, supporting the builders to arrive at the estimated cost of the real estate project. So mean to say that whether they are they not, you may have a question, are they not following it? Yes, they are following it, but however, it's unscientific way. And if you ask a question to any builder, he says, sir, I'm constructing 1 lakh square feet of apartment. Average cost is about 1.5 thousand rupees. So my cost is 15 crore rupees. That's how the industry has been looked into all the years. So is that only a 15 crores is the estimated is the cost of the project? If you ask me, ask him, he says, sir, this is a construction cost. Is it a cost, entire cost? Then he ask him how much he's selling. He's selling for 3,000 rupees. That means to say he's arriving 1,500 rupees as a project profit. Is it so? No, no, sir. Over and above, we have other costs also. What are other costs? Which may be a plan approval cost, which may be a borrowing cost, interest cost, administrative cost. However, when they arrive at this 1,500 rupees per square feet, they have not considered all those costs of their expenses. So that is different. As a professional, we have to educate the industry, we have to educate our client, we have to educate our builders. Estimated cost is not mere a construction cost, it goes beyond a construction cost, like a development expenses, including your administrative cost and borrowing costs also. So this is what important. Maybe in the subsequent slide, I'll tell you where all it should be mentioned. This estimated cost is part of your application itself. It is not somewhere later. We have to enter these details in the application stage itself. So earlier we didn't had a practice to arrive at what would be the estimate cost. Now it is very much important for any builder who would like to be in the business. they have to arrive at this cost, and the same shall be given to the RERA authority at the time of registration. Next is internal development work. These are all the work which is carried out inside the project area are called internal development work. Similarly, you have external development work is there, which is outside the project. Next important definition is the interest. Why this is important is like earlier we had a practice like customer delays. If the customer delay in making payment towards the installment, so is liable to pay 18% or 24%. And if at all, if the builder delays in delivery of the product, there would be in the agreement 3 rupees per square feet, 5 rupees per square feet, or 10 rupees per square feet. And there is no mention about delay with end up with having same like 20%, 18%, or 24%. Now RERA has made it mandatory under section 2ZA, where in case of a delay by the promoter or a delay by the allottee, the rate of interest for such delay would be the same. So what is the rate of interest? So rule 8, in the rule, in Karnataka rule, it is mentioned maximum is SBI MCLR plus 2%. That means may not more than 10%. So both of them should ready to pay 10% per annum as a delay interest in case of delay payment of installment delivery of the project to the customer. So it's very important as the financial consultants or a chartered accountants to educate our promoters, educate the clients, builders, stating that in case if you are delayed a project by 1 month or a 2 month, in the interest at the rate of SBI MCLR plus 2%, which is nothing but the EMI of the client itself. Consider if you have 100 apartments and 3 months is delayed, and the 3 months he end up with paying the installment equivalent to EMI of the bank loan, how much would be the loss for him? So that's the important aspect of the act, and also the delay in terms of delivery. Next is the person definition 2ZG, which is a regular definition, which is important in terms of filing a complaint and when you form an association. So definition is a normal definition. Yeah, promoter is very important, as I was discussing in the preamble and in the introductory slide. Who is promoter? The promoter 2Z, the act as defined, a person who constructs or causes to be constructed. So who is constructing? The constructing by a builder, developer, or a contractor who construct, or causes to be constructed. Who is causing that construction? The person who is owning a land. In case of a joint development, landowner is causing that construction. So it's important to know that landowner is also included as part of promoter. However, in few places, people or the authority very loosely they say that they're co-promoter. There is no definition of a co-promoter in the entire act. However, for the purpose of discussion, they say that co-promoter, landowner is called a co-promoter. However, as per section 2ZK, promoter includes the landowner. It is very important, and also it goes on says the person including the development authority or any other public body, like doesn't differentiate or discriminate the private or the public or a government itself. So the government agencies in Bangalore, be or the Karnataka Housing Board or anybody in maybe at the Bagalkot, even the Bagalkot Development Authority, if they're forming the layout, they also called a promoter. They also require a registration under the act for that project. And if you see, if you log into the RERA website, government projects which are all registered, there may be a Karnataka Housing Board or there may be a development authorities. So like BD and all. So even the government agencies who are in the business of selling the real estate shall comply with RERA provisions. There is no differences. Like any government agency is in the business and has to pay the GST. So in the same way, this is also the same. Like if the government agency is in the business of real estate, they all come under RERA. real estate agent. So the person like who deals with the real estate project in terms of selling and representing the promoter are called real estate agent. And he also has a role to play. He also has a obligation to perform under the act. He also require a registration under the act. Real estate project. So in a simpler word, the real estate project include anything which involves real estate, which may the building, which may be a plotted development, or it may be the industrial land, it may be the mixed development, commercial, which includes everything as part of real estate definition of real estate project, section 2ZN. So any questions we have till now before we proceed? So I'm just going to the applicability of the act, and let me know any questions. I can take up questions before we move.
So questions will take at the end, sir.
Okay, sure. So let us move into the next part. We have seen the definitions. We have seen the preamble of the act. We have seen the applicability and date of implementation. Let us see to whom all this act is applicable, and what is required for the or any exception or exemption for that. As I mentioned in the previous slide, there is a definition of a real estate project. Real estate project, the definition of real estate project includes whether it's a commercial, whether it's a residential, whether it's a plotted or industrial or mixed development, which involves the land and building or land itself. So for the act to be applicable, there should be a real estate project first. And the area of the land in that project shall be more than 500 square meters or more than 8 units. Meaning to say that I have a land which is less than 500 square meters, or if I'm constructing a project which is less than 8 units, those projects need not to, it's not in the ambit of RERA. Okay, so they need not to comply with any provisions of RERA. So that is the background about it. And fundamentally, we should see that the project which is having more than 500 square meters or more than 8 units are covered under the Act. Second, having said, is it applicable to everything? Like I have a project which is I've carried out about 10 years back or 5 years back. Should I cover under this or will this act is applicable to those projects also? The answer is yes, or answer maybe no. So what is the exemption to that or exclusion to it? If there is a project which is a completed or which has received the completion certificate as on date of commencement of this act. That means to say as on 1/1/5/2017, if the project has this completion certificate stating that the project is completed in all the aspects, then that project need not to be registered by the act or need not to comply the provisions of the act. What do you mean by that? The meaning to say that a project which has completed in all aspects and received the completion certificate as on 1/5/2017, 1/5/2017. Like what we have under GST, there is a transition provision wherein similarly we have under RERA we have the applicability and also exclusion. So on 1/5/2017, if the project received the completion certificate, those projects need not to register under RERA or need not to comply with the provisions of RERA. And in case of a redevelopment, what do you mean by redevelopment? I have a old project or old apartments and I want to demolish it and reconstruct again completely. Then that project also require registration, because if in that project, if there is additional units to be sold or a new allotment to be made in the project, that require a registration under RERA. Consider I had an apartment project which is 50 years old, only 50 apartments were there. Now I am demolishing it. If I'm constructing only 50, and that 50 is only to the those projects which is of a redevelopment, those projects registered under RERA or comply with the provisions of RERA as long as there is a new allotment. Otherwise, those projects need not to register. So this is the act. This is the applicability of the act. So similarly, states have given some relaxation, stating that based on their practices, as I told, this is a central act. Central act has given a power to the states to monitor, not modify, it's monitor and also implementation. If you remember the of the power of all the land dealing or land related laws are vested with the state. Central government doesn't have any power to act upon any land related laws. So similarly, this act is also related to the land related. So they do not have a much say about the state practices. However, when the RERA has come into picture, they have given little relaxation to the state to implement within the ambit of the act. Accordingly, what they have done is, in terms of the ongoing project, what do you mean by ongoing project? The project which has started prior to implementation of the act and which has not received the occupation or completion certificate are called ongoing project, and which require a mandatory compliance under RERA, so that those projects are all monitored by RERA. So accordingly, the definition of ongoing project is included in Karnataka rules, which says, which including all the project which is ongoing in nature, that means which has started prior to 1/5/2017 and have not received the certificate of completion as on 1/5/2017. That is the one aspect. Second aspect is, in case of a layout, even though project has started prior to 1/5/2017, and as on date of rule notification or rule notification, they say that it has been given for a maintenance is given for the local authority in case of a plotted development. In case of an apartment, which has given to the association of allottees for maintenance, or in case of any project which has development is completed in all aspect and 60% of the sale deeds have been registered and executed. So this is what is the provisions under Karnataka rules, and which is not much different than what is the central government has given it. That means to say on the date of notification act, that is 1/5/2017, or maybe on the rule 11/7/2017, if they have received the occupancy certificate, those things are all exempted from the act. That is what is the background about it. And if you see that all these ongoing projects require a registration before 31st July 2017. So what act is given by virtue of proviso to section 3(1) of the act, which says all the ongoing projects, that means ongoing projects are the projects which have started or received the plan approval before 1/5/2017 and have not received the occupancy as on 1/5/2017. Those projects are given a timeline to register before the authority within 3 months from date of notification of the act. Act is notified in 1/5/2017 and the 3 months is 31st July 2017. Hence, all the registration requirement is before 31st July 2017. This is what is a mandatory in case of a ongoing project. As I told you, in a project, it may be completed project. That means you received the occupancy certificate before 1/5/2017 is called a completed project. The project which is ongoing, that means not received the occupancy certificate on 1/5/2017 is called ongoing. Anything which received unsanctioned or it is received after 1/5/2017 is called new project. So all are act new projects also require a registration. Only a completed projects exempt from registration. So what it mandates, as we have seen applicability of the act. Act is applicable to all the projects. That means to say we should have a real estate project. The project, they should have a land. The land should be more than 500 square meter or 8 units. So if these conditions are satisfied, those projects require a registration under RERA. So, so what does that mean to say? Those projects require a prior registration before the authority. We'll see that what do you mean by a prior registration, what do you mean by registration. If I don't register, what will happen? Section 3 restrict, section 3 bars any project for the purpose of marketing, sales, booking or offer for sale, inviting any person to purchase without registering that real estate project with the RERA authorities. It is like insurance policy. Can the insurance company launch any policy without register with the IRDA? The answer is no. Similarly, here also, that there cannot be any project launches, there cannot be any real estate project launches without registered with the RERA authorities. And if you see a website, it is called rera.karnataka.gov.in. You can see there are about 4,000 plus projects have been registered in the state of Karnataka. And the highest registration is by Maharashtra. Almost it is touching about 30,000 projects, real estate project. We have second is Uttar Pradesh, and third is Gujarat, fourth is Madhya Pradesh, and Karnataka stands at number 5 position. And Karnataka is having about 4,000 plus real estate project, of which about 60% is in Bangalore only, remaining 40% is outside Bangalore. So it is very much important, those projects which require to be marketed, sold or collect money advertisement, those projects require a registration under the act. This is the importance of section 3. So let us look at what was the pre-RERA and post-RERA practice. Can you see something called point number 9 here, which has a launch or advertisement? In this slide, this is the last point of the number 1 to point number 9. And if you see that earlier pre-RERA, I can say this used to be a point number 1 or point number 2. That means to say that even before they obtain all approvals, before they have their sanction plan in hands, before they have proper MOU with the landowners, they used to launch the project, they used to advertisement the product itself. So that is not permitted now. Now it's very much important for any builder or any promoter to have a proper due diligence of the land or the market feasibility of that project, or do the market study of the project, whether I should have a 2 BHK at this area, whether I should have a studio apartment, whether I should have a plotted, or whether I should have a villa project. In case of a villa project, whether it's a 6 floor, yes, permutation combinations, and do the feasibility and market study before he get into a MOU with the landowner, because that's where it's for him to understand and also have the proper understanding with the landowner depending on the market acceptability. Then get into a JD development, or in case if he wanted to buy it, he can buy it. Then get all the approvals or NOCs for the purpose of sanction plan. Have the sanction plan for the project, which may be a plotted development or it may be a building plan, and get all the documents. Give all the documents to a RERA. Apart from sanction plan, apart from the legal document, you have to give the KYC, your past records, financial statements, undertaking affidavits, and your estimated cost of the project, tentative start date, tentative end date. So you should give all the information to the authority along with your application in Form A. Pay the government fees, filing fees, registration fees, and take the registration. And the registration may take between section 5 mandates the authority to issue a registration within 30 days. In case if they don't give a registration, it's a deemed registration. Fairly, authority is issuing the registration well within 30 days nowadays. Initial days it was more because of the more number of application, understanding of the public or understanding of the promoter was less. Now it's fairly, people have understood the requirement, and also authority is also clear that what is that they have it. So the RERA registration generally get within 30 days. Having received the RERA registration, then only promoter go to market, launch or advertise its project. So a smallest of the real estate project require at least a 1 year or a 18 months or maybe 24 months in case you wanted to have a more due diligence and come to a market for the purpose of color sales, because he has to have a sanction plans, NOCs, and also all other documents come to RERA and also register it. So it is utmost important for a developers now to realize that it is not the market like earlier. The moment I have some documents, I will launch it, collect money. That's not permitted. So about 1 year, 1.5 years, the investment would be blocked, or they should have the ability to wait for 1 year, 2 years for them to launch the project and see the return on that. Similarly, earlier you have it whether the we had a practice of collecting the money from the known people, unknown people, friends, relatives, stating that I'm coming out with a plotted development or coming out with a real estate project. Why don't you pay money, and I'll give you the one piece of land or one apartment to you at so and so price. So now post RERA that is not permitted. It is as good as like any other government agency having a real estate project, like a housing board or a Bangalore Development Authority, the BDA, the way they follow in terms of allocation, allotment, collection of money, possession, everything would be in the same manner under the Act. It would be fairly in the same manner. Generally, it mandates to have a booking form, and that booking form should be serially numbered, which is nothing but your application form. Having received the application, you have to issue an allotment letter. What do you mean by allotment letter? So based on the application, and if the customer agrees and he'll make a payment of say 1 lakh rupees, then you have to allot the site number A105 is belongs to you, and this allotment letter has certain conditions. Condition include what are the timely payment of money once you get into agreement, when should you get into an agreement, and when would be the registration, and what would be the payouts. So all those fair information would be available to the customer when he gets through the allotment letter. See, and generally we see various and most information in the agreement for sale, or there would be some flexibility in terms of having the transaction. Now with RERA, it says you have a standard format and follow the standard, except for the purpose of payment collection and the payment of installment from the customer, which may be vary from customer to customer. Otherwise, remaining everything would be the same. It may be a start date, end date for them. So once the allotment letter is issued, then you have to get into agreement for sale. So it's very mandatory for a promoter to have a agreement for sale, which shall be issued, which should be signed, and the same shall be require a registration before the sub registrar. So it's maybe industry may not accept it, or industry may not willing to practice this, but this is the Act. Act says you have to have a registration of the agreement for sale. So when should you register the agreement for sale? The moment you intend to collect more than 10% of the cost of the unit, like apartment is 1 crore rupees, you wanted to collect more than 10 lakh rupees and get into the agreement, and that agreement require a registration, and which should suffer the stamp duty. So this is the important aspect. As a promoter, as a consultant, as an advisor, as a chartered accountant, I have to recommend, I have to suggest, I have to advise my client, don't get into a practice of entering into a agreement after collecting 10%. Ensure that the moment you collect 10%, get into an agreement, and if you do not follow this, section 60 is a violation. Section 50 mandates, or 60 section 60 gives a power to the authority to to levy a penalty up to 5% of the real estate project cost. So say 100 crore is the real estate project cost, having say 200 apartments. So if you don't follow it, authority may levy a penalty up to 5%. So 5% is a huge, 5 crore rupees would be a penalty. And you may be surprised to listen that in the initial days during the registration, authority has levied a penalty of 1%, 2% for the delay in registration itself. So you have 100 crore, or you say that 10 crores also. 10 crores of 1% is a 10 lakh rupees. Very difficult to pay the penalty at the initial stage itself. That means to say your 1% profit is eroded from the project, entire project itself. So that is the impact of it. And this punishment, the penalty, is for each offenses or each non-compliance. By end of the project, if you have non-complied, if you're not complied for 2 or 3 occasions, then the penalty would be 2-3%. There is a profit left out, and authority would be a profit. Authority would be a partner in profit for your non-compliance, your wrongdoing. So that would be get into that. Please advise the client properly. Let him follow it religiously. Otherwise, penalties are huge under the act. It is not 500 rupees per day, not 200 rupees per day, not 5,000 rupees per day. It always talks about percentage of cost. Assisted you haven't seen penalty for any other act. And in my practice of 20 years, 19 years, any other act which levies so much of penalty. Even if for a RBI condonation also used to pay 1 lakh, 2 lakh, or 5 lakh, or 10 lakh rupees, not on the transaction value basis, or not on the percentage of transaction value. So that's what is the difference between the RERA and any other statute. So what happens next? And say in a project, if you have more 51% majority, like in 100 apartment, the moment you reach 51%, that means people have booked 51 units, and you have to form an association. Generally, this association used to be followed at the end of the project, or maybe at later point of time when the promoter, when the builder started handing over to the buyers as an association. Now, Act mandates to form an association the moment we have 51% booking in the project. That's very important. So continue, complete the development of the project, obtain the occupancy certificate. This is very important. Section 11 of the Act mandates to obtain the occupancy certificate. We have seen various projects without a occupancy certificate. Not only in the Bangalore, I am sure that other places also, like there is a large deviation. When there is a deviation, planning authorities don't issue the occupancy certificate. So those buildings become unauthorized development, and RERA doesn't encourage that. RERA says in case of you have not received the occupancy certificate, then you're liable forever. The reason is it is not a complete. Unless you have a OC, it is not a complete project with RERA. That means to say if you do not complete it, you have a liability for the entire life. Whose life? There is no either your life or a building life or customer life. Period. Okay, that's very important. So OC is a must under the Act. So what will happen? You receive a OC, and within 3 months from date of occupancy certificate, you have to convey by way of registration. So earlier practice, our practice was used, whether we have a OC or not, we used to register the project. Whether we have completed or not, we used to register the apartment or the plotted development. Now, under the Act, under the RERA, it is mandatory that you have to convey the property only after receipt of OC. So this is very important when you guide your customer, please convey them. You cannot convey it, you cannot register the property without having a OC in the hand. Next is title insurance. What do you mean by title insurance? Like you have to give the guarantee to the title. Even though we mentioned the indemnity clause in the sale deed or sale agreement, and even though we know that unless I have a good thing, I cannot pass on the good thing. But under RERA, it is made it very much clear that if there is a title defect, that means to say there is a claim under the title stating that title is bad, and there is a dispute or litigation which crystallizes into the crystallizes into a place where the home buyer loses it or the position, then the promoter shall compensate for that defect in the title. Number one. Second, there is a defect liability for 5 years. Earlier, we used to have the defect liability, like in terms of customers identifying and coming back and say that there is a defect in the structure, there is a defect in the material, there is a defect in the service you have provided. So 1 year would be the warranty. Under RERA, it is mandatory that there is a 5 years of warranty. Okay, of course, the warranty has to be addressed properly. As a customer, sorry, as a builder, as a promoter, I should clearly educate that what is that covered for 5 years. Consider if you don't maintain and you have not taken AMC, proper AMC for the equipments, how can a builder gives the 5 years warranty for anything? If you do not maintain in a proper way, if you do not use the property in a diligent way, disciplined way, and I cannot give a guarantee of any defect liability for 5 years. As a professionals, we have to what should be communicated to the customer and how the 5 years should be counted, and in case of that there is a wrong and erroneous action or the act of the promoter, there would be some financial impact. Ensure those financial impacts is also considered as part of the project cost, and you keep aside that money for 5 and make use of that money during the 5 years of in case of any claim by the customers. Finally, you hand over this to the association of allottees. See, this is how the post RERA and which brings a complete transformation in terms of how this industry work, how this industry behaves with the customers. As I mentioned initially, this RERA, even though it looks like a very small act, but which has a very big transformation in the industry itself. And some of the important practices I will explain you in next 1 or 2 slides. Even though the impact is huge, I will touch upon, and in 2 hours I cannot go on well in complete detail manner. If you have any doubt, I can explain during the program or otherwise also. As I mentioned, what is the first transformation? You cannot market, sell, launch unless you have a prior registration. That is section 3. That means at the first instance itself, you should have a product which is registered with the authority. You cannot have a product which is not registered. Do you think any product which is not approved by the authority, which is not as per that, is available in the market? No. So the project before you register. You may think that, sir, I have a approval plan, sir, building approval plan, I have a plotted development. Is it not a approval? I said it is approval for you to construct, but how the product come out, I don't know. They have given only a construction, but there should be a description of the product. It is like a design of your car, which is approved by the respective the department or the ministry of the automobile or whatever you call it as. But can you sell your model based on the design of the car, or you sell the car itself? The answer is you sell the car, not the design of the car. Similar way, real estate also, this industry, this act also mandates, don't sell the design, you have to sell the product. You have to sell the product. So how the product looks, what is the description of the product, what is the specification of the product, when will you deliver it, what is the cost of it, what is the tentative, how it looks tentatively. So this is what is required to be disclosed to the buyers through section 3, which is a registration. Section 3 registration. Similarly, section 4 is a registration, like you have to provide all the information for you to a project. In a simpler term, what is required for a registration is, like if you go and wanted to take a loan in a bank, what details you give for an apartment purchase? You give entire details to the authority. KYC details of the builder, past records, past history of the builder, how many projects completed and how many progress, any litigations on the project, or any other information which is required to be registered, required for the authority before registration. Mean to say that your lot of information should be given, and of course this information which is related to the project only required to be provided, and without that registration may not happen. Section 11 is something like a functions of the promoter and duties of the promoter, and one of the important function, it says that like you have to file quarterly update. What do you mean by a quarterly update? Which is your returns, like quarterly returns. What is there in the quarterly returns? In quarterly returns, all the information relating to the real estate project shall be provided. What are all the information which required to be provided? You have to provide the information about status of progress of the project. What is the development work which is happening? Is a tentative end date. What are the various approvals you have received from quarter to quarter? Any litigations, any cases are filed by anybody? In case if you have filed earlier, any pending litigation, give me the pending litigation. If it is disposed, give me the disposal details. If there is a payment towards the welfare, employee welfare or construction welfare fund, give me the construction welfare fund. What is the sales in the project? How many booked? How many available? How many car parking are allotted? How many car parking is available? And finally, how much you collected from the customer? How much you deposited in the bank account? What is available in the bank account? And in case you have withdrawn bank account, how much you have spent for this project, how much you have spent for any other reasons. So entirety in case of quarterly update, this is the quarterly update one supposed to give for each project. That means to say promoter, the means it's here is a builder or a developer, has to provide this information every quarter about the project. And as a financial consultant, whenever we file the quarterly update for any quarterly filing for or monthly filing for any of the other under any other statute, whether it may be income tax, whether it may be a VAT, whether it may be a GST or a service tax, whether it may be under any other statute, to my knowledge, what we always give is about financial information. We may not be required to provide any non-financial information, but this act is mandatorily to provide non-financial information also. That means to say you are providing entire information about the project itself. When you provide all information, there is nothing to hide, there is nothing to left for him to retain himself without communicating to the customers. And what will happen? All this information will be published in the authority website. When I publish these things in authority website, this become a public document. Any customer can watch, any professional can see, any vendor can see, or any stakeholder see. That is called one of the important objective of RERA, to bring a transparency, bring a symmetry of information between all the stakeholders. So which is part of section 11. Here is an opportunity for the professionals to advise and also to take a work of quarterly updates. However, as a note of caution, we should understand the importance of this quarterly update before we undertake and start working on this. Important thing is that of SBI plus MCLs, which is a transformation itself. Next is section 14. Section 14 talks about consent of the allottees. What do you mean by consent of the allottees? Like in a project, if you intend to do any modification, consider you have taken a sanction plan to construct 100 apartments of 2 BHK. Tomorrow you come back and say that no 2 BHK, I will construct 3 BHK of 70 apartments. Then there is a change in the plan itself. Then you have to come back to the allottees and take their consent. Earlier, the agreement which you are used to enter by the customer and the promoter was a one-sided. There used to be all clauses without any consent of the allottee, without consent of the home buyer. Now it is completely not possible. Like if anything which is of a major changes, there should be a consent of the allottees, and without that there cannot be any changes. Friends, please note that this is a law which is driven by the customer, even though it is monitored by the authorities or the government, and you are highly responsible and highly reportable to the customers. I'm sure that you have seen the customer behavior in the real estate industry. There would be a large groups, and there would be a social group or WhatsApp group, a small information of the project within no time, which will spread across to everybody. And section 14 is a prior approval. And one thing, please note that in under RERA, everything is a prior approval. It is not that post go and get the permissions. That's not permitted, not possible. Whether it's a registration, whether it's a completion, whether it's a modification, whether it's a change of anything, all are prior approval. Prior approval of whom? First, there should be 2/3 consent of the allottees. This is very important. Authority is okay as long as you go and get the consent for that modification, for that change from the customers allottees. And if they don't permit, you cannot do anything. If they have permit, then only you come to the authority, file application for it, and take the approval it. And as I mentioned already, defect liability period for 5 years as per section 14. Formation of association also I mentioned the moment you reach the 51%. And next is agreement of sale. Okay, what do you mean by agreement of sale? So as I mentioned in the initial stages itself, there is a mandatory format to be used, and one of the important objective of RERA is a standardization. As I mentioned, somebody may have 3 pages agreement, somebody may have 300 pages agreement. Now under RERA, the format of agreement of sale is also notified by the RERA itself, and every promoter shall make use of the same agreement. There is no modification, there is no alteration is permitted except to suit their requirement about the project. There is no provision to modify anything beyond what is permitted. One of that information is the escalation price. You cannot go back and ask stating that cement price has rose from 300 square rupees per bag to 400 rupees. You pay 5 rupees extra square feet. That's not permitted. Once it is agreed, it's agreed. Escalation is an escalation. So there is a delay in project. Because of the delay, you end up with paying the interest. And because of that interest, you wanted to collect some money from the customer. That is not permitted. So it's a escalation free, except for a government levies like a taxes, which is increased, that you have to pay it. Next important transformation is all the transaction on the carpet area, not on the super built-up area, which I have discussed in detail. And title guarantee for lifetime, as I told you, you have to give the title guarantee for a lifetime, section 18. And also have mentioned agents require a registration under the act. They are called real estate agent, section 9 man. Only those agents are authority or agency appointed or capable ability to explain the product, then on allocate the I've seen that everybody is a real estate agent, like in the initial pay to a unregistered agent, they report it, because a promoter shall not entertain, shall not allow any unregistered agent to market the registered projects. Next, I mentioned is the penalties from section 59 to section 68 is very high under the act. Single agreement for land construction. Earlier we have, in case of a villa project, UDS of land document. It is construction come sale agreement. and these agreements are notified by the respective states. Except for the Tamil Nadu, all the states have a single agreement. However, Tamil Nadu has a 2 agreement for sale and construction. So it's important for us to advise our clients to follow this agreement only format only. Then I also told you section 13 mandates the compulsory registration of that sale agreement before collecting, for you to collect more than 10%. Title insurance, which is nothing but our land on the land, there is a mandatory under section 16. Title insurance is mandatory. However, in India, titles are very difficult to get insured. So at this point of time, only couple of insurance agencies like there is an agency which is from Singapore and America. They are providing the title insurance in India. And also recently there is a HDFC Ergo has come out with the title insurance in the for the real estate, which is also mandatory. However, authorities are not insisting much about it. And also section 12 talks about veracity of the advertisement. What do you mean by veracity of the advertisement? Any advertisement which ended up with unfair trade practice, those are called veracity, and which liable to compensate based on that veracity, and liable for the penalty. Say an example, 3 kilometers from the airport. So is it true or not? Or 5 minutes from the airport, at what time? When? Is it practical, possible? 5 minutes from airport is a 10 kilometers, just 10 kilometers. Is the 10 kilometers is a roadway or a crossover, a crow way? So it has clear when you say that in the advertisement, we say that world-class amenities. What do you mean by world-class amenities? Is it world-class amenities? Are you willing to develop for 50 lakh rupees apartment? Please think over. There is also say that 100 amenities. So what are 100 amenities? You say sitting bench in a park is an amenity, and pathway is an amenity, a fountain is an amenity, a common public toilet is an amenity. So please mention all those 100 amenities for the customer to see or the home buyer to see before they buy it. So that is called veracity of the advertisement, and very strictly following. And if you see that the various builders for strictly not following this, again not complied section 12, section 60 figures, section 60 mandates up to 5% of the project cost as a penalty. So it's very important for as a professional to understand and also advise the section 11 is again a lot of obligations and also the functions to be performed by the promoter, which includes the registration, quarterly update, advertisement, maintenance of the funds of 70%. I will discuss you in subsequent slide about the 70% funds also. That is a section 11. And section 16 mandates transfer of common areas to the association. So what do you mean by transfer of common area to the association? We have seen in the initial slide about the carpet area. Do you remember? I say yes. The carpet area is to be conveyed, is to be transferred to the individual buyer, and entire common area to be transferred to the association of allottees. So what do you mean by a definition of a common area? Common area excluding carpet area, everything is called a common area in a simpler term, including project land. You have a 5 acres of the land in an apartment project. The 5 acres land is called common area. And earlier we had a concept of undivided share of land to be transferred to the customers, and also a super built up area. Post RERA, only carpet area to be conveyed, carpet area to be transferred, and entire project land should be transferred to the association of allottees as per section 16 and 17. Of course, in the state of like southern state, it's very difficult at this point of time because other laws like a stamps and registration and registration act has to require a amendment to that effect. Section 3, as I told you, require a prior registration. Bankers are not funding for those projects which doesn't have a registration. Bankers are not extending the housing loan which doesn't have a RERA registration. And post RERA, number of launches are less because you have to wait till you get a RERA registration. Without that, you cannot have a launch. So they're also like keeping quiet, just launch and collect money and not doing anything. And refund of allottees, as I told, in case of any complaint, any orders are passed, refund has to be made along with the interest within 45 days from such order. Next important aspect is about the force majeure. What do you mean by force majeure? We all know that section 5 of the act, it says force majeure. Force majeure is an act of God. What do you mean by act of God? Maybe a cyclone, maybe a landslides, and which may be by way which those are all called act of God. And apart from force majeure, there is no other reliefs are given in terms of for the purpose of delay. That means to say, if you have earlier we used to draft agreement stating that non-availability of a material, raw material, is called force majeure. Cooperation by the government agencies in issuance of license is a force majeure. Any court order, any litigation, we used to mention everything under force majeure. And because of the force majeure, if any delay happen, and such delay to be considered for the purpose of the end delivery of the apartment or a project. Under RERA, it is not permitted. Force majeure is simply it's a project. God. There is no other way other than the reason of the force majeure, act of God. It is not permitted for any delay in delivery of the project. If you delay, compulsorily compensation as per section 18 is applicable. And as a real estate agent, they should maintain their books of accounts, and which they have to be reported from time to time. In Karnataka, it is not mandatory at this point of time. Maybe we can expect at later point of time. Compensation for delay, as I mentioned, compensation as per section 18 is mandatory under the act. And under RERA, one thing is important. We have to mention a start date along with the registration and a end date. That means within which I am delivering, within which I will deliver the project to you, start the end date. With all the aspect, whatever you promise, within which you have to deliver it. So anything which is beyond end date, it requires the compensation, and the promoter shall compensate the customer to that delay. That delay interest, as I mentioned, SBI MCLR plus 2%. And in case of a delay, there is no delay is permitted under the act beyond 1 year. Only 1 year is permitted. Beyond 1 year, no, act doesn't permit. What most of the state says is, you go back to your allottees, go back to your customer, take their permission, take their consent. Is it okay to give the extension beyond 1 year? So that is what is most of the states doing it. In the state of Karnataka, even though we have more project which is delayed for 1 year, authority is not any action in relation to that. As section 4 already I have told, section 4 is about the registration. You should have a comprehensive document for registration. Next is, these are the document which is available in the public domain. So you can log in to a RERA website. Anybody can download any information about any real estate project. And professional involvement, as I mentioned, the chartered accountant, the architect, the engineers are involved from time to time in terms of various certificate to be issued for the purpose of certifying the percentage of completion of the project, and also amount withdrawal, amount to be allowed to withdraw from the project based on the percentage of completion. And also agreement of sale is a standard. Speedy dispute resolution I have discussed in the initial time, like you will have a complaint to be filed. Those complaints are online and mandatory to dispose within 60 days from the date of filing the complaint. Agent registration, I told you. Appellate tribunal is present, and next appeal is before the high court only, so that within 120 days from if you have any concern complaint, you can go to high court to file the case. 60 days at the 60 days at the adjudicating officer, another 60 days for the appellate tribunal, and next appeal is before the high court only. And also please note that refund is not permitted under the act unless there is a promoter wrong or any wrongdoing of the promoter. Like I have invested into the project with an intention there is a increase in the value of the property. At later point of time, you have come to know that there is a problem, their market is sluggish and you cannot get a appreciation. If you go back and ask for the refund is not mandatory to be given by the promoter. Okay, if at all if he gives is, he will deduct 10%, up to 10% he can deduct as the booking amount and he can refund the balance amount. And section 15 is very important, like in projects require a prior approval of the authority in case if it is projects are transferred from one promoter to another promoter, say ABC promoter, and he wanted, because of whatever the reason he could not complete the project, he wanted to transfer it to the some other person. So that person shall take the approval of the not only the customers, and also they should take the approval of the authority before do that. So these are all the various transformation which are very important, where as a professional we play a role. Apart from there are various other legal aspects of it. I'm not touching into various legal aspects of it. So I'm restricting only to the our area of practice, and also very important for us to know that. Then is the registration. How the registration happens? Section 4. It is an online process. There is no physical documents. Not even single paper is physically accepted. All communication are online through mail or the help desk. So in the interest of the time, I'll just run through. I will share this document. You can go through. And these are all the various details document which are all required for the purpose of registration. As I told you simpler, if you wanted to take a housing loan, what are the document you should give? Those documents, apart from those documents, you have to give other documents like your KYC, your start date, end date, estimated cost of the project, and the various few affidavits. And as I also told you, there is a estimated cost of the project should be given along with that. And I'll spend you some time on the financial aspects of the RERA. So under RERA, it is mandatory to have 70 and 30%. What do you mean by that? 70-30%. Section 4 to LD of the Act is mandates every real estate project shall have a separate bank account. Every project shall have a separate bank account. That bank account shall be opened along with the application, and the details should be given to the authority. So what is next? Mean to say that having taken it, having taken that the account opening, so whatever be the money you collect, from the allottees, of which 70% shall be deposited into that specific project bank account. So it is mandatory to deposit the 70% to the project designated bank account. It is not a RERA, it's not escrow account, it is a designated bank account. So what will happen after depositing to 70%? So money would be lying in that 70% account, which is a RERA designated project specific account. And what will you do? For you to withdraw the money from that account, the 70 rupees or 70%, you have to go to the architect, engineer, and a chartered accountant. All the three professionals are important for one to withdraw the money from the project bank account. All the three professionals issue a certificate based on the percentage of completion of the project, and a chartered accountant clearly specify this is the money you are eligible to withdraw from the project bank account. Accordingly, the accordingly promoters are permitted to withdraw the bank account. So please note that without a chartered accountant certificate, without an architect, without an engineer certificate, promoter cannot withdraw the project money from the 70% account. And also it has been observed by the authority, like even we as a chartered accountants are not guiding the promoters properly, and various certificates are issued erroneously. Various certificates are issued in a current date, allowing them to withdraw in the older date. So various observations are made by the authority on the chartered accountant also. I don't know whether they have written a letter to the KSCAA. However, they have written a stating that please recommend the recommend the members to follow the Act rules and various circular notices which are issued by the authority in a true and strict manner to avoid uh, 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 any challenges or anything which is not favorable to the members. The reason is the certificate issued are the public documents which should be displayed or allowed to view by public. That means the customers of allottees, members, professionals, vendors, bankers, everybody. And if those certificates are not correct, which is erroneously issued, members will have a difficulty to face a disciplinary action. So if you see the guidelines which are issued by the authority in the month of January 2020, I think 16 or 17 January, they specifically mentioned any wrong or erroneous, any wrongdoing of any member intentionally will be reported to the authority. Will be reported to the institute for a disciplinary action. So very important for as a members to follow this. So the 70-30 again. So this is a section 42 LD. I'll spend 2 minutes here. As I mentioned, 70% that money should be deposited in a project bank account and money can be withdrawn based on the professionals, based on the percentage of completion. So very important, like unless we issue a certificate, they cannot withdraw the money. Next is what? Also, he shall accounts his books of accounts audited. Project bank shall be accounted within 6 months from the end of the financial year. That is, we call it as RERA audit. Like 30th September is within 6 months from the end of the financial year. Each project shall be audited and certified by a chartered accountant in practice, stating that amount collected for a particular project have been utilized for the same project, and withdrawal is based on the percentage of completion of the project. So it's very important for us to understand this and issue and audit the accounts of that project and issue a statement of account and also audit report. So this is what I told you: professional certificate, a engineer, architect, and a chartered accountant who certifies what is cost incurred. So in Karnataka, various forms are prescribed by the authority. In terms of initially, when there is an ongoing project, there is a rule called 42C, which mandates the promoter to obtain a certificate by a chartered accountant where money invested is more than money collected from the allottees. If the money is collected is more, then bring back the excess collected money into the project bank account. That is called Rule 42C. I'm sure that many of you would have been issued this certificate, and also many of the promoter have obtained, and a few promoter are failed to obtain this certificate, and mean to say that they have collected more money and they have not deposited into the RERA designated bank account within 3 months from the date of application. Then section 42LD, that is 70-30, which I have told you, that is called within withdrawal based on the percentage of completion. Then is the RERA audit. Also have discussed with you third proviso to the section 42LD. You have to issue the certify the statement of account as well as the report of in form 7. And these are all the form 1, form 2, form 3. Form 1 is a CA certificate, form 2 is a architect, form 3 is a engineer certificate. Again, form 4, form 5, form 6, these certificates has to be issued on every quarter by 3 professionals. This is QU is nothing but quarterly update, and quarterly update where chartered accountant certify the what is the estimated cost and what is the incurred cost, and where how much money I am allowing the promoter to withdraw from the project bank account. So based on the chartered accountant certificate only, they are eligible to withdraw the money from the project bank account. So as I mentioned, the role of chartered accountant under the act, like we can give the advisory services, we can undertake the registration services, we can take their legal draft documentation like agreement of sale documentation drafting based on our legal knowledge and legal practice knowledge. And I can issue a certificate for withdrawal of funds under section 42 LD, proviso 2, proviso 3, for the purpose of percent withdrawal of funds, and also under the RERA audit third proviso. Also, we have given a privilege to appear before the authority before the tribunal, before the adjudication officer, because this adjudication officer or tribunal is given a power of a civil code, and where chartered accountants, company secretaries, and cost CWS are permitted or empowered to appear before these three authorities, even though they have a powers of civil procedure, civil code procedure. Unfortunately, in entire Karnataka, I can say only three chartered accountants are appearing before this, and remaining all are advocates. So we lost the opportunity of representation services before this agency. Only three, and only those three is very like nothing. I remember there are about 2,000 advocates appear before this authority already, and 3 out of 2,000. You imagine what would be the percentage. Even though this is one of where chartered accountants play a very vital role under this act. Finally, general consultation, and you can have a training, impact study under the act, and all those things. Form 7, as I mentioned, it's a audit certificate, RERA audit certificate, which gives the where chartered accountant shall certify money collected, money deposited, money withdrawn, and used for the specific project based on the percentage of completion. And other opportunities are there. We can undertake to file the quarterly updates and also annual compliances, so which is also a very important aspect of the industry. And other professional, like as I mentioned, in terms of financial aspects of it, we can play a very important role in terms of fixing the pricing and also decision making, considering various aspects of it, because there is a registration cost, there is a compliance cost, there is an insurance cost, there is a defect liability cost, there is a compensation cost. So how much amount, how much percentage of this amounting in a project? If you say that all this amount to 5%, and obviously 10 crore cannot be a cost, it goes up to more than 10 crore, say 10.5 or 11 crore. So that means to say, if you don't consider all this costing as part of the cost, very difficult for the promoter to see the profits in the project. And I always say that, like, certificates, knowledge of RERA is very important. Don't undertake any services under, especially under RERA, for the reason I told you. These certificates are publicly available. Like unless you have a VAT audit, GST audit, service tax audit, income tax audit, PF audit, ESI audit, companies audit, those audits, even though amenable to the RTI, which may be available at a special request, but these certificates which submit to the RERA, which is publicly available, anybody can access to it. And that too, if the home buyers are aggrieved that if you have issued a certificate in a project, if the project is not delivered in time, or if it is gone, the project has gone, or the promoter has done any mischief, and is even the professionals are also attacked by them, stating that the professional certificate were issued were wrong, we hand in glove with the promoters in terms of withdrawal of the funds. So we am seeing various aspects of it in various state authorities. Authorities are issued a show cause notice to the professionals. How did you issue the certificate in spite of the facts are not correct? We have seen a case in Maharashtra where architects are dismissed from professional, and also their Architect Association of India has taken a stringent action against cancellation of COP. And in Tamil Nadu, one architect, he has suicided himself because it has come to know that this certificate is wrong. With that, there is a huge impact on the allottees, and authority has issued the show cause notice. There is a large protest in Tamil Nadu wherein architects were not willing to issue a certificate to any promoter based on that incident. So we have to understand the impact of this before we issue, or before we see, you give the advice, but when it comes to the certification, sure that you before issue those certificates. And as I told, this RERA is a very different animal itself. It is nothing to do with your ACDS, ICDS, your section 11. It's nothing to do with your accounting standards. It's purely depends on what is the money realized, what is the money spent, what is the percentage of completion, and how much you allow them to withdraw it. So don't try to reconcile between various statute with RERA. It doesn't match with you, and that is not the intent of the act also. However, as a note of caution, before issue, please ensure that the books of accounts are properly maintained and also reconciled, because we know that this industry is a very indisciplined industry. I'm sure that you are all experienced that because of the GST they maintain books of accounts. Otherwise, they never used to maintain the books of accounts. Even during the GST tenure also, they maintain only the purchase because they want to avail the input tax. Otherwise, that is also not maintained. Of course, now post 5%, I don't know how many are maintaining the books of accounts properly. So this is a difficult other way difficulty facing by this industry. And I recommend, if you are following any of the issuing any other any certificate, you should have a strong hold on the data also. The reason is customers know better than a chartered accountant in any real estate project. You say that fifth slab is casted on 30th June. And if it is not casted on 30th June, we will be in a mess, because 30th June, whether the fifth slab is casted or not, every buyer knows it through their WhatsApp group, because every buyer are getting update themselves on a day-to-day basis. It's very important and critical for us to have a data in our hand and also a proper information before we certify it. And a last note, as I mentioned, as a public document, and it's a purely matter of interpretation, and give appropriate disclaimers. Of course, these disclaimers may not come to your rescue when something goes wrong. However, ensure that you follow a stringent or stricter SOPs or the guidelines before you issue these certificates. And manually, human being to maintain the data. I recommend to use any software in this aspect. It may be Excel, it may be anything else, or the few product which is available in the market, so that those data are available from time to time and which should be saved, which will save our time professional, which will be which risk will attached to it. Sir, I'm done with my presentation, and I'm ready to take any Q&As and any other questions from the participants, sir. Yes, sir.
Sir,
These questions are in the chat. I can take in chat also.
sir, in QA there are questions, sir. Kamlesh is notarized affidavit under section 3(1).
Yes, sir. Sir, your voice is not audible.
Is notarized
Sir,
affidavit under
question
section.
and answer from the chat.
Yeah, fine, sir.
Sir, can I? Okay, is notarized affidavit under section 3(1) mandatory for project registration? Answer is yes, sir. It should be printed on a 20 rupees stamp paper, and also it should be notarized before rotary, sir. Yes, sir.
What is the concept of utilization certificate and relinquished deed?
Sir, utilization certificate, under which act we are talking? Relinquishment deed is a gift deed, sir, in case of a plotted development, or in case of a development plan which is having more than 20,000 square meters of a development area. So it's a mandatory to relinquish the road, civic amenities, park to the government or a local authority. That is called relinquishment deed, sir. So without a relinquishment deed, we cannot get the sanction plan, sir.
Okay.
Yeah.
So, question from Sabarshina CK. Does this RERA supplement or complement the Karnataka Apartment Ownership Act 1975?
Okay, sir, KAOA 1972, read with the rule 1975. Okay, that KAOA is a separate act itself. Generally, those act, KAOA is a post handover to the association. That's how it talks about. for the purpose of maintenance. RERA is equivalent to COFA. We have Karnataka Apartment Flat Owner Development Management Act 1972. So that is a reflection of RERA, sir. COFA is a reflection of RERA. KAOA is it is a supplement. It is not a replacement. It is in addition to RERA, sir.
So next question.
Does RERA applies to NA land? What is NA? Non-agriculture or converted? What is NA land, sir?
So non-agriculture.
Obviously, sir, non-agriculture land means like, so read the definition of a real estate project. If it is a project, if it satisfies the condition of the real estate project, then it is applicable, sir. Consider you have had 10 acres of land. 10 acres you wanted to register each acre with somebody, okay, and which doesn't have any development activities, which doesn't require any plan approval, then RERA is not required, sir.
So if promoter is developing land into plots by himself, by his own capital, and will
Okay.
not receive any advance from prospective customer,
Okay.
still is required to take registration under RERA.
What if he is developing? What is the intention of it?
So he is developing by himself with his own capital,
For
and
what purpose?
sir, after rewards he will sell.
Okay.
After obtaining OC and everything.
Okay. So the intention is to sell, right, sir?
Yes, sir.
Okay. If you read the definition of a real estate project, which is defined under section 2ZN, okay, which is very clear, okay, for the purpose of selling. If a real estate project is for the purpose of selling, then those projects require a registration, whether it is a for the purpose of selling now or later. Okay, section Z2N is very clear. The project is for the purpose of selling, and section 3.1 is very clear that if the project is a real estate project, then it requires a registration, sir. And unless you don't sell it perpetuity in your lifetime, RERA is not applicable. Otherwise, whether you sell it today, tomorrow, RERA is mandatory, sir.
So then if we don't advertise all those projects, then
Okay, if you don't advertise, then it's okay. Do not advertise, do not market. The moment you wanted to market, you wanted to sell, that point of time, you come and register, sir. It is like this, you complete, obtain your OC, now you wanted to sell, come and register now, sir.
okay. So registration is mandatory.
Registration is mandatory, sir. Sir, one step ahead, one step I'm going. Maharashtra, Bihar, Orissa have given a guidelines to the sub-registrar. Without RERA registration, they cannot register the project in the property in the sub-registrar office, number one. And second, in the state of Karnataka, without RERA registration, guidance value will not be fixed by the stamps and registration department. I'm sure that you are all aware of there is a guidance value fixation for each project. In Karnataka, government is very reluctant to restrict or reluctant on registration sub-registrar office. However, what they have done is projects which is not registered under RERA, those projects will not get a guidance value. Without guidance value, you cannot register before the sub-registrar.
So next question. Sir, if we we have our own properties completed the process of NA
Yeah.
and develop after the act came into existence on its own cost,
Okay.
and it is gifted to family members, whether RERA Act is applicable?
Gifted to RERA, it is not for selling, na, sir. It is a gift, na.
Yes, it is gift to family members.
No, RERA is not applicable, sir. If there is no sale, there is no RERA.
Okay. Next question. If I am developing my own agriculture land into a non-agriculture residential plot, then the registration under RERA is required. Yes, that is what.
Applicable, sir. Yes, sir.
It is required to open separate bank account by promoters for different projects.
Very much, sir. Each project is a separate bank account, sir.
Which tax and cesses need to be considered under estimated or incurred cost?
Sir, first we should understand what you mean by estimated cost of the project. Estimated cost of the project includes the land cost and the construction cost. Construction cost includes all the cost which is incidental, directly, indirectly for the purpose of a project. Everything is included, sir. Whether it's a tax, cess, whatever you call it as, all are included as part of the project cost. You can consider it, sir.
at the time of booking form, the developer would have not assigned any flat or plot. In that case, do we consider them as an allotee? Rupees 5,000 can be collected. 50,000 can be collected.
Okay, sir, it's a very thin line of difference between a booking amount or a allotee. Having collected 50,000, what he has done? Has he allotted any unit or any requested any unit? If it is not requested any unit by them, or if there is no blocking of any unit, no allotment of any unit, then you can consider they are not an allotee. Generally, the moment guy who pays 50,000 rupees, certainly there is a chances of identifying one unit and blocking that unit, sir. So, mean to say is allotee only.
So next question, under quarterly updates, under tax head, which tax do we need to mention?
Which taxes are applicable? Generally, it may be a GST at max. Other than income tax, you can put anything, sir. Other than income tax, other than taxes on the income, you can put all the taxes under this head. But you have to follow inclusion method, not exclusion method. If you are following GST as the exclusion method, like GST creating a liability, okay, then that those taxes will not come here. You also follow exclusion method or inclusion method, sir. Consistently, you follow it.
It's the next question. Many of these projects, which are 10 to 15 years old, have completed the projects, but have not taken completion certificate and occupancy certificate. Is it mandatory for promoters to register under RERA?
So this is the intention of the act, and if you see in Maharashtra, Maharashtra has given the notices for all the projects to come and register under RERA if you do not have a occupancy certificate. However, if you read Karnataka Rule 4, they have given some exemption where the projects are completed in all aspect. Project have been completed in all aspect, and 60% of the sale deed is registered, then those projects are exempted. So under that shelter, we can take this section 10, like 10 to 15 years old. If those projects are completed in all aspects and 60% of the units are sold in the project, then those are exempted, sir. Otherwise, still they have to come and register.
Next question, sir. If there are no
Yes, sir.
allotments and the promoter,
Sir. Yeah. Somebody say, please stop asking yanning. Yes, sir. Sorry, because I had a late night drive and also the early morning wake up. Extremely sorry. I know even I was embarrassed to like yanning. Sorry for that, sir. Yeah.
if there are no
Yes,
allotments
sir. And
and the
also,
promoter is ready to the property with his funding and sell the plot apartment after OC, whether RERA is to be complied with.
yes, sir. RERA is mandatory, sir.
Can it be rupees 20 stamp paper for all the affidavit?
Sir, there are one affidavit and Form B is one affidavit. There is a one affidavit under section 3(1) and another affidavit for the land owners. So each affidavit is a separate and you have to buy separate for each affidavit, sir.
Sir, affidavit under section 3(1) requires project acknowledgement number. What should we do?
No, sir, applied, write it applied. Project name you can write it.
How the land cost to be computed under RERA? That is, as land cost or guidance value as per Karnataka Stamp Act. So what is the date of which guidance value to be taken is the date of registration of.
Sir, if you read Rule 5.2, okay, Rule 5.2 has mentioned the cost of land. Cost of the land for the purpose of Section 4, it talks about acquisition cost or the guidance value as on date of filing application, whichever is higher can be considered. Accordingly, Rule 5.2.1 they can consider, sir.
So is there any recent amendments in RERA?
Sir, amendment in RERA is not happen, and in my 4 years of experience, of course, I've started practicing since 2016 on RERA. To my knowledge, there cannot be any amendment in RERA because it is required larger interest and larger consent from the home buyers industry However, there are various notifications, circulars which are issued by the government, Karnataka RERA authorities from time to time, which is very, very practical, very, very important for us, sir.
So next question. Can COVID
Yes,
be
sir.
considered under category of force majeure?
So strictly seeing, various case laws have come and force majeure. COVID is not a force majeure. However, authorities have taken a considerable step and also considerable note on this, where Ministry of Housing Ministry has given a direction to all the RERA authorities in the month of May. Please do consider COVID as equivalent to force majeure and give 6 months time for them complete the project. It's only for the purpose of completion of the development. There is no rights of the buyers have been taken away. In case the project is delayed by 6 months, so even those projects require a compensation to the buyers. So there is no relief in terms of the customers are given, only in terms of payment of penalty for any delay in completion. Those are all only excluded. Those are all relaxed, sir.
Sir, who are eligible Form 4?
Chartered accountant is in a practice, sir, other than the employees.
All three certificates, Form 1, Form 4 and Form 7.
Form 4 and Form 7 shall be a different chartered accountant. It cannot be a single chartered accountant. Form 4 is for withdrawal of money. Form 7 is for the purpose of RERA annual audit. And if you see that RERA annual audit shall be certified by a chartered accountant who is a statutory audit of the entity. So in my opinion, both the professions should be a separate. However, Form 1 can be certified by any professionals, either who issue the Form 4 or who issue the Form 7. Anybody can certify, but 4 and 7 shall be different professionals, sir.
Does it apply to projects?
Which one? RERA is applicable to project Pan India. However, the jurisdictions are with the state authorities. If you have a project in Kerala, then it belongs to the Kerala RERA authority. If the project is in Maharashtra, it goes to MahaRERA, like that.
What and all other overheads we can add to construction?
So the definition of a construction cost is again part of your Rule 5, wherein it talks about construction cost, approval cost, administrative cost, on-site cost, off-site cost, taxes, borrowing cost. Anything which is related to the project cost can be considered as a construction cost. Sir. Construction cost doesn't mean only a construction, which includes the development cost, sir, which is Rule 5.2. If you read the Rule 5.2, which has the definition of cost of construction, sir.
So which date is to be considered for land valuation as per RERA? Is it the date of registration with RERA or date of acquisition of the land?
Again, I'm repeating, Rule 5.2 says that acquisition or the guidance value on the date of acquisition, date of filing up application, whichever is higher can be considered as a cost, sir.
Yes, sir. Answer now. It was indeed really great listening to the speaker. I'm pretty sure that the information shared by you will help in our professional endeavor. Before I conclude, I would like to bring to the notice of attendees that KSCA is organizing a webinar on companies' acceptance of deposit rules 2014 on 22nd September 2020. Speaker the webinar is Aniket S. Talati from Ahmedabad. I would like to thank today's speaker, CA Vinay Thyagaraj sir, for accepting our request and sharing your knowledge on this today's webinar. Thank you, sir.
Thank you very much, sir.
I thank Kumar Jigjini sir, President and team KSCA. I thank CA Gaurish Bhargav and Bagalkot District CA Association. I would also like to thank our technical team, CA Vinay Bhatt. My special thanks to today's attendee for taking out your valuable time for this webinar and your patience listening. Thank you, sir. Thank you all.
Very much, sir. Thank you all participants.